Hello, everybody. Welcome to Watch This with Dennis. We're back with a Saturday live stream, and rather than talking about new watch releases, I decided to take a gander on is that even the right expression to use? I don't know, but that's what we're going to say. Take a chance on using a discussion point that I think isn't particularly surprising, and that's why I'm not sure whether or not it's going to be all that interesting, but about luxury watch pricing, in particular, luxury watch pricing and the notion that the luxury brands have damaged themselves with the sheer volume of price increases that we have seen over the last, oh gosh, I mean, I guess we could go back as far as we want. I would probably go back as far as the pandemic, so kind of 2020, and then from then on in particular, but that's in part because that's when I started to get into collecting itself. But anyway, we'll see where that ends up going. Housekeeping items. I did finally put out the review video of the Swatch Flower Bay. I don't have a link ready to just post in the chat, but if you go to the channel, you can easily find it. It's doing as well as you would think a obscure red watch from Swatch would do, which is to say not well. And other than that, nothing else much going on. On the wrist today is my 5-digit Rolex Explorer 2, which I've had well before these price increases, about, I guess, over 19 years at this point. And so that is pretty much everything I can think of to cover before we get going. I am on call for work, so if I have to pause, I do preemptively apologize, but work comes first. This is not work. This is hobby. So, all right, let's go ahead and greet the chat, and then we will get underway. Trap Vision, good morning to you. Let's see. Trap says, hope you have a great show. I'll be listening while on the road. Well, I hope you drive safely. Junior Johnson, hello from Michigan. Well, hello back from Kansas, the sunflower state. Well, we're not in a sunflower state of mind when talking about luxury watches. So in the link, or I should say in the video description, I have a link to an article Ariel Adams over with ABlogToWatch wrote a few days ago, 5 days ago, about this topic. And that's what prompted this. This is not story time with Dennis, so I will not sit here and read this to you. And as you can see it on the screen, it is massive. Well, this is including the comments, but it is a massive I guess we would say analysis, but I don't know. It's not numerically driven. So I don't really, analysis is right, but don't think it's going to be quantitative. But anyway, the title of it is The Luxury Watch Industry Created Its Own Worst Enemy with High Prices, and Now It Faces a Reckoning. And there are a number of I guess, what we would call bullet points that Ariel discusses in the article. But I think there are 5 in particular that are noteworthy. The first thing is that I don't think anyone will debate. And if they were to try and debate, they would lose because factually it would be incorrect. But that the prices have gone up significantly. So, like, saying that aside, because there's not really a lot of time spent on that because that's just a factual statement. We'll go into it a little bit, though, to set some for level setting for the discussion. But Ariel thinks the 2 main fundamentals are that the pricing strategy that luxury watch brands have been doing is unsustainable, and that in turn there could be a reckoning because they've gone down this unsustainable path. So that's kind of 2 things. And then supporting that, again, he has more than 3, but I'd say the other 3 areas is he thinks there's a disconnect on the affordability front. He thinks there's an over-reliance on investments, the concept of buying watches to have them as investments, and also that because of the drive up on the pricing, there's a change to the customer base. And we'll touch on all of those because I think they're interesting points. I don't agree with all of them. At least I don't think they're all as in play as much as I think he implies in his article. But by and large, I agree with most of these sentiments that he has expressed. So let me jump over to another article that I have in the video description that you can go and look at, or I want to just go ahead and show you this chart. So again, I said, like, there's no point in debating that prices have gone up significantly because they have gone up significantly. What you see is an article from Watch Charts. This article came out a few months ago, I believe, but it compared the prices of several brands, the average price increase. So you took the average price from December 2024 and then the average price in June 2025 and looked at it. And what you see on the screen is the change. And they're all increases that are on the screen. So from as low as, again, from the samples that they did, from their analysis of retail pricing. IWC went up 1.4% on average. This is across the models, up to Rolex's 8.1% increase. Now, why did this happen is not the point of this discussion. And the reason why it happened varies, but tariffs are in no small part a play in some of these price changes that we're seeing for the United States specifically. That's a pretty big deal. And this, again, is before some of the latest stuff, like what happened with the Swiss tariffs, which are now, it appears, coming down to being the same as the EU at 15% versus the 39% they've been at for a few months. However, a few other things are in play, like for Rolex, for example. This was not the average increase of their stainless steel models. This was driven by gold, and gold had some very significant price increases. So just sort of as a summary, with the help of AI, I like to acknowledge when I used it to help me gather up some of the data here. Some interesting things that I had it dig up was, one, historically speaking, watch inflation has been lower than the consumer price index, which I don't think is particularly surprising, because normally used items would depreciate. But again, the CPI is made up of a variety of purchasing behaviors. Watches aren't really a factor in it. But from 1986 to 2025, the average increase on watch pricing has been about 1.22% per year, which is well underneath what we typically, we usually see more than 1.2% per year CPI growth. So that was interesting. Rolex, though, like this 8.1%, they raised their gold models by about 8% in January 2025. So, but gold has been up just across 2024. It went up about 27%. And then we know we hit new record highs on gold, or if you didn't know, I'm letting you know. New record highs for gold were hit in 2025. So even with the 27% in 2024, there's been even more increase since then. So, that gold went up by about Rolex raised their gold by 8% just at just after the start of what would generate this chart. And then there have been additional increases for some of the brands as well since then. So like Patek, for example, they raised their prices, which you see here on the chart, the 6.8%. That price increase was from May of 2025. However, in September, they went up again by about 15%. So this chart's even conservative. There have been changes since then, and a lot of that is driven by things like tariff demand and such, or I should say tariff pressure. That's not really tariff demand. Audemars Piguet, they're 6.6%. You see on the chart. That was sort of split between gold went up about 10%, steel went up about 5%. Vacheron was pretty even, I think, and they're 6.5% across the model. Same with A. Lange & Söhne with their almost 5.5%. IWC was interesting, this 1.4%. So they actually, on over 24 models, had cut the prices by about 4%, which really surprised me when I didn't know that until I was putting this together today, because IWC is a Richemont brand, and Richemont is my poster child for excessive price increases because they also control Jaeger-LeCoultre. And JLC has had some of the most ridiculous price increases to ever be increased. I don't mean just over the last year. I mean like over the last 5. A lot of us remember when it felt like just overnight reversals went up 40%, and they didn't stick new movements in them, which is part of Ariel's point in his piece. But anyway, so IWC actually cut a bunch of prices earlier this year on many of their models. A few of the models did go up, but then they did a 5% increase in June. So here we are. Overall, the brand has gone up, whereas otherwise they were actually averaging to go down, which I thought was very, very surprising. Another thing just to throw out there, this analysis that Ariel has done is, of course, focused on retail prices and new watches. We have not seen these increases on the used market. It's not been the same, nor would you expect it to be. They are relatively divorced. I think some people have speculated that price increases would be more seen on the used market because of the tariff situation in the United States. And I don't think that's very likely. And the reason for that is, it's like if you live in a state with a sales tax or a VAT overseas, and someone else lives somewhere where there is no sales or use tax. That's just lost money. That doesn't get baked into your watch used once you walk off the lot with it. Like, that's gone. So those particular aspects I think are pretty interesting. So just again, some of the level setting kind of behind this particular article. See, some more people have joined us, so I'll go ahead and say hello to them. Underachieving Watch Collector, greetings. Minneapolis, Minnesota. I'm trying to think if I've ever been to Minnesota. I do not believe I have been. Thomas with the Escapement Show, good morning. Caught your live stream this morning, part of it. Slept through the first 2 hours. Schumann, hello from Overland Park. Well, hello back. I am in Olathe, so Overland Park is, we're basically contiguous cities. So. Pickled Pickle says, Thomas, wish you would did more live streams. I don't know. Thomas, how often do you live stream? I know you usually live stream at a particular time on Saturday, but I guess you don't do it weekly, do you? I don't see the announcements for it, at least. Vronkroll, hello. Very long comment from Vronkroll on last week's episode about movements. Collectibles, good morning to you. And yes, we are neighbors. We're as neighbors as YouTube, as neighborly as YouTube will allow. My words are not flowing very well today, but I'll try and make up for it. All right, so let's go ahead and again. So we've acknowledged. I've shown you the data. I've shown you the chart, and you guys can go and read these to your heart's content. That's why I have them linked. About that, the price increases are real. I don't think this is a surprise to anyone, but okay, FYI, they are actually real. So since I'm not going to read the article to you and the pictures aren't very relevant, I'll go full screen, as sad as that is. And so let's touch on a few of the major points that Ariel brings up in that piece. So the one that I disagree with, so I want to go ahead and start with it because I'd like to get your guys' perspective, is he talks a lot about there being an over-reliance on the investment narrative. And I'll actually try and scroll to the kind of the section where, there we go. That way you'll just at least see the heading and you can jump to it if you want to get to this part, because he'll have his multiple paragraphs on this topic. But so summary of it is that he thinks that some buyers are purchasing today new watches, not because they're interested in the watch, but because it's seen as a way that they can flip it or resell it. And so there's a bubble going on because there's the investment purchasing of the watch. And okay, we know that behavior exists to some degree. That was obviously rampant in the pandemic. And today there are still some things that make sense, especially watches you have to play the game for. So getting particular Royal Oaks from Audemars Piguet, getting Aquanauts or Nautilus's Nautili from Patek Philippe. Most of the steel Rolexes that are not ladies models, those are, you have to wait a while. You can go gray and pay a little bit more and get them. So I don't know, it depends on whether it's really worth it today, but that's a point I'm going to bring up. But so anyway, we know that behavior exists. There are certain new watches that sell more used than they do new. Whether you could make money selling them yourself or not, we'll set that aside. For some things like the Nautilus, or certain models of the Nautilus, you definitely could. So the idea that the brands are exploiting that, hey, we know and accept that people are buying these, not because they actually want to wear our watch. They want to resell our watch. And so let's go ahead and do that. It happens, but I don't think it happens as much as I think Ariel thinks it happens. Granted, he's in the industry, so he'll know better than me. But this is my show, so I get to speculate. So my speculation is where we see this most prevalent is in the limited edition approach. That strategy, that's a FOMO-based strategy, and FOMO works on two fronts. So even then, it's not entirely investor-driven. One is, rather than have someone sit there and think and analyze and try and weigh versus other watches or what else you could spend your money with or anything else, that you got to buy now. Like, again, you see the play field, of course, on my back wall. Pinball is my other big hobby. In pinball, this is done a lot by a number of brands. Almost every brand either sets a limited production for the entire run or has an LE edition that is limited in count. And the whole purpose to an LE is FOMO. Like, in almost all instances, you can get these same toys and gameplay in a lower model. Maybe not the lowest model, but in a lower model. So there's a version designed to give you the gameplay experience that the LEs have. And so it's just like with watches, if you just have, well, okay, if you want a silver dial instead of a, it's the common dial. If you want the black dial, it's LE, and you got to act quickly, buy sort of strategy. So, but that again is not just for investors. That can be just trying to goose that sale right away because you want to sell the watch out as quickly as possible. So, but that does play to investors as well, because there can be investors that will go and say, all right, Rolex Explorer, like they make a bazillion of those. I'm not really interested in getting one of those, but some new special, Le Mans Daytona. Okay, well now, it's like, I've already got 5 Daytonas. Why would I need a 6th? This one's going to sit with its stickers in the safe, and I'm going to sell it. And I'm going to try and make money that way. And they probably will make money if they're able to get one. So I can see that being in play. But the reason why I don't think it's that big of an issue is, one, there have been historically so many LEs, and we see them not sell out. And the joke has been like Grand Seiko, right? Grand Seiko played the LE game for years, and they still play it. But it also feels like we see less of this nowadays because a lot of enthusiasts have pushed back. I don't know if that's why we see less of them. I think they're just not selling them out. I mean, in theory, everything's limited. Eventually, production ends. So, like the 5711 is a limited watch. There is a specific amount that were built. They're not building anymore. So once it went out of production, it has become limited. We can get really reductive with the logic here, but there's not much point in that. All I'm trying to say is that the idea of using a limit to sell stuff, it works. I don't know that it works that well for investors, though. Like people standing in line to get the Studio Underdog and was it Fears or Fairs? I don't remember who they did the collab with, like at the British Watchmaking Days. Like that FOMO, I don't think was a whole bunch of flippers. I think that was using FOMO to try and goose enthusiasts to not think, just spend. And it worked. So these techniques can work. I'm not sure that the brands are truly doing what this headline says, which is this fallacious investment angle. I mean, I know a number of people who bought watches during the pandemic because people were making money hand over fist in the pandemic. And now they were well heeled enough that they didn't need to sell their watches. But if their hope is to get their money back on what they paid, like if they bought in March of 2023, I mean, maybe it will get back to that at some point before they're dead and they can sell it. Or I guess maybe they pass it on to someone and they, pass it on to their kids and their kids get the money back. I don't know. Or maybe they just wear it and decide, what, I'm not gonna sell it now. But that wasn't why they bought the watch. They bought it for investment. Kind of like when meme stocks were getting popular. I got friends all over that are stuck with GameStop and AMC stocks because they diamond handed it and then the thing fell through the floor and now they're stuck, and the brand, the company still exists, so their shares are still real, but they don't want to take the loss. But it'll never be what it was, or if it will be a long time. It wasn't a good play, is my point. But you didn't know ahead of time. I mean, that's the gamble. I don't think that the brands are really exploiting the investment angle to the sophisticated degree that I think Ariel implies here. So he even said he thinks, like he noted that they thought that there is a conspiratorial watch pricing racket in parts of retail. Now, whether there's some sort of price fixing or something going on, maybe I could see that. But the idea that this is driven by the investment angle, maybe a couple brands are playing this game. Maybe Mr. Stern at Patek is trying to do this. I mean, that's the assumption why these Cubituses, are they Cubitai also? Can I just tie everything like Nautilus, Cubitai? Can I just end everything like that and pluralize it? I don't know. I don't know Patek's rules. I'm apparently not their sort of customer. So maybe that, he might be. I mean, that's why we all assume those watches are moving at the rate that they are, because it's okay. Like visually, I like it better than some of the other stuff in the Patek catalog, but it's hardly overwhelming. So anyway, so my point being, there may be some that are playing this investment game. I'm not sure that it is to the degree that Ariel thinks that it is. Catching up with chat, Von Kroll says, sometimes I get carried away and write a mini wall of text in comment section. Well, I think people that read the comments will appreciate that. I don't know how many people actually read comments. Some of you clearly do because you reply to each other. A lot of people might leave a comment, but I'm not sure they ever. Sometimes if I reply, I might even reply with a question and they don't go back. So maybe they just like to leave their thoughts and they're like, I'm not really here for a discussion. I'm here to tell you what you did wrong and we're moving on with life. Which, hey, it's their time, so they get to decide how they want to use it. Trap Vision says, not sure how often watches are flipped, but social media definitely promotes the investment portion frequently. Yes, I do want to clarify. That's a very good point, Trap. And I do want to clarify this article from Ariel is focused on the decision making of the luxury watch industry. And so my objection is I don't think they're thinking of the investor angle or using it or exploiting it in the way he thinks so. It is in play, and that's why I tried to open with it. We know certain models, like there are people that try and scoop them up and want the stickers on them, and they're going to sell them for more money. Like they're, that gray market activity, as it's commonly called. Even though that's not an accurate depiction of gray market, it's really more unused secondhand market. But words aside, we all know what we mean. That you're right. That's definitely in play. And social media came up a lot in the comments of this article. Again, you can click on the link and read them. Definitely came up a lot about like social media is blamed for the watch industry being able to and choosing to raise their prices as much as they have. And I agree with that. But I don't think it's the watch industry direct. Like it's almost like I just don't feel like they're being sophisticated enough to properly exploit the investment class. I just don't think they're doing that game broadly in that way. Most of the brands just don't have the cachet to command it. Yeah, it works when everyone has stimulus checks and nothing to do and no vacations to go on, and we're going to go and we're going to buy a bunch of stuff because we can't travel. But those times are gone now. So other than like AP, Patek, Rolex, stainless steel, Longa, other than just a few brands and models within those brands, it's just not that environment anymore. Look at Omega. Like there was a time, it was before the pandemic even, there was a time when like Dark Side of the Moon traded above retail. That ain't true anymore. Like there's like what of theirs really trades above retail? Speaking of brands that have exploited price gouging, or I'm going to call it gouging, with what they've done to the Speedmaster. That was an affordable luxury, what I would call affordable luxury watch once upon a time. It is not now. But they also have competition on the used market because you can buy plenty of Speedmasters if you're willing to buy used for prices that are under what they retail for. So that's an interesting dynamic. But very good point. Social media definitely does promote the flipping of watches. Underachieving says Omega's throttled back LEs compared to the past. Again, another brand where it just wasn't working. I think it doesn't work, and that's why I think a lot of them have pivoted away from it. Trap Vision continues. Companies have been known to rely on influencers to sell a particular narrative. Sure. There are also we're going to use the word influencers, or I'll just say like channels like this one, where some of it is almost Tudor is my go-to, right? Like Tudor for the longest time, maybe it's true. I don't know. I haven't done a standalone Tudor video in quite a while. Probably not since Watches and Wonders. Like there was a time where Tudor was just views. Like, I don't know why. I don't know why you guys wanted Tudor videos. And by you guys, I don't mean those of you literally watching right now. I just mean in general, like YouTube in general. But my Tudor videos always would do better than Chopard or Cartier. And Cartier outsells Tudor by a lot. But there's just not the same interest. So some of these things, I think some of these brands understand that, and they've relied a lot on the influencer angle. I think Tudor's just a lucky beneficiary, and I think it happens because Tudor is owned by the same entity that owns Rolex. A better example is Christopher Ward. Christopher Ward cultivates relationships with channels, and that's why Christopher Ward is in your face so much. How many videos came out about that new loomed Bel Canto? I didn't even count. I used to get, and I don't get me wrong, I appreciated it. I used to get embargoed press copy stuff from Christopher Ward. I haven't received any for the last few releases, even though I would generally make video. Well, my assumption is, given that I wasn't generally overwhelmingly positive on those videos, I think they got tired of letting me have this stuff early, since I wasn't saying I was negative on the watches, but I always had issues with something about the designs. So that's my theory, is I wasn't a very useful mammal to them, because I didn't ask for the watches. I just have the press kits with the nice photos and stuff to, give my first thoughts. And then I'm like, okay, well, yeah, I don't like the dial design here. Sorry. And then it is what it is. You can go back and watch them if you care. They're not that interesting videos. So those sort of things, though, with how some brands like Christopher Ward, though, play very well with that influencer crowd. Koji, thank you for being a 99-cent club member, by the way. I do appreciate it. Laughs at my Cubitai reference. And Von Kroll notes that, who cares about Patek's rules? I just want to say things right. I had someone once, I don't know if they were poking fun. I mispronounced lots of words. Koji corrects many of my words. But I said something once. I don't remember. Something real, but it'd be like tutor. And it's like someone wrote, I can't remember. It was like they were, I think they basically was like saying, you're not saying tutor right. Why can't you get it right? What's wrong with you? And they didn't tell me how to say it. It's just kind of but whatever the word was, I was like, I never heard it any other way. And I thought maybe they're just making fun of that I say everything else wrong, that they were just making a joke at my expense about, like, you're not saying Timex right, Dennis. That's not how nobody says Timex like that except a rube. It's kind of like that. Leighton, welcome to the live stream. Folks still want to compare the fake Rolex scarcity when they make 1 million watches. I think between both sub variants, there's about 180,000 made a year. I'm going to assume way less Seamaster Pro 300s are made. I try and spell out the acronyms. Do I think you're right? I don't know. Because Seamaster is so popular. You may be. I mean, Omega, I don't know. There's such a big catalog. I mean, Omega's got a huge catalog. All right. I think you're right. I'm going to say I think you're right, because while there are a ton of SMP 300 SKUs with Omega, there are several Submariner SKUs with Rolex, and it is one of the most popular models. The thing is that it's sort of twofold. So, like, I've been, as the longtime viewers have known, I've been on the list, let's say the list, for a Rolex Submariner no date, just the stainless steel no date, for about 2.5 years now. And the brands, I think, only get, the 80s get a certain amount per year. And my understanding is they know for the year how many they're going to get. They may not know exactly when they're going to get them, but my understanding is they do actually know what models and how many they're going to get of each reference. So, they've got, but the demand is so high that's why there are the lists. But where I agree with what Leighton has brought up about the fake scarcity is, I do get a bit frustrated with people that act like, because you have to wait, that it's a rare watch. Most enthusiasts wouldn't say this, but the implication is there. Oh, you got to wait. Like, here, you didn't have a spend history, Dennis. You've been on the list for a couple of years. They sell more of the used than they do new. So, okay. So it does mean more people want it than they are making, but they do make a lot. They do make a lot of them. I used to have an SMP 300, a bit heavy for me on the bracelet. I mostly sold it because of the bracelet. I wore it on strap mostly when I owned it, because the bracelet, where it's just a little too much for me. I do wish it would taper, but oh, what a chonker. Like, if you want to watch that, I don't mean chonker as in thick, though it is a thick watch. Like, if you want to watch that feels like, if weight equals luxury to you, that watch is beefy. Like, there is some weight to that SMP 300. So I had a silver dial one. I really did enjoy. I still think Omega does some of the best silver dials in the entire watch industry. But we're not here to talk about how great their dials are. Von Kroll says, Cubitus with the roundiest movement. As an aside, I don't understand. They did shaped movements with the Gondolo. Not all of them, but they've done them with several Gondolos. I don't know why they couldn't have shaped that movement. Again, I think that's a Theory Stern thing. Leighton continues, yet you can walk in right now and get a no time to die at almost any boutique. Seems the demand is real for the sub. And the demand was originally for the no time to die. There was a time before the time died that no time to die was, you had to wait a bit. I don't know if you still have to wait for the Snoopy Speedmaster, the one where he goes around on the rocket on the back of the watch. There was a time those were trading, I think, double used versus new. Leighton agrees with Trapp about the social media impact on awareness. Vronkel notes in an alternate, I'm talking faster now because I realize I'm spending a lot of time on the chat, but I appreciate an active chat. Vronkel notes in an alternative universe where Rolex is successful, but not so outlandishly successful, I own a Submariner. It is a very nice one. Leighton says, I think Cartier is probably the only balanced secondary and retail market. Yeah, there's not too much discounting, at least on the men's Cartier models that I can think of, but they do generally trade for a little bit less use than they do new. Vron Kroll says, stability is nice for most of us. Huge fluctuations in price just make the environment harder for the enthusiast. Leighton notes, I was at a Tudor event last week. My $200 Timex Noah Lighthouse got compliments all night, even from folks wearing Parmigiani Fleurier. Leighton continues, but it wasn't hyped until after sellout. Underachieving says, the Swiss steal from the rich. Yeah, they're very Robin Hood, except they're not giving the money to the poor. Leighton says, I think all the micro brands pay for play. A lot of them that start do. But Christopher Ward is not a micro brand. And actually, Ariel, that's another item Ariel, who wrote the article that I've been referencing today, agree on. He actually did that on it might be 2 episodes back of the ABlogToWatch podcast. It came up, but he was the one who raised it. This is an interesting thing. Christopher Ward has never been a micro brand. They have never been one. What they have successfully done is made people think that they are one because they act like a micro brand, which is very interesting. And it's been very successful. And a lot of people really respect Christopher Ward because of the positioning on the value propositioning, how they interact, and what events they attend. Like they feel very micro brandy, but they are not, and nor were they ever a micro brand. That company was not set up as a micro brand. So one of those very, very interesting things in my opinion. And Cloud, welcome to the live stream, Cloud. Cloudkin says, Dennis, your thoughts on Atelier Win getting influencers to pump their new $30,000 watch? Almost makes the Swiss brands a good value, even with price increases. I was not aware of the influencers on the Atelier Win. We actually talked about the Atelier Win on the last live stream because my issue there was, well, I like the black one aesthetically. What a price jump. I mean, we know brands want to move up. And that's what, again, I just minimized it, but that's what this article is really talking about in part. One of the sections of it, in fact, I'll let you watch my painful scrolling. I think it's towards the end, was a discussion about it wasn't the follow the leader. This like customers being loyal to price, not to brand, and how these brands are moving themselves up out of their existing price bracket to a higher price bracket. And the reason that the brands want to do this, and I do agree with him on this argument, is when you need to maintain profit, and if sales are going down, what strategy can you do? You either need to somehow sell more watches, or, wow, wouldn't it be easier if we could just make less of them and sell them for a lot more? And Seiko has done this, and I don't just mean Grand Seiko, like they've spun Grand Seiko off proper, but I mean like Seiko's got a range now, right? We still got Seiko 5s that you can find for under $200 all day new. And then you've got other watches like the King Seiko line, which are several $1,000s, even though they're still using the 6R movement in them. That sort of thing is really common. Atelier Win, trying to do this, but it felt like they skipped about 20 steps in the whole process. I don't think it's going to work, quite frankly. Their whole, not to mention those watches weren't limited. They were limited production. We're only going to make a certain number a year. Like Chopard tried to do this with their Lucent Steel, that Lucent Steel salmon dial I love on the LUC collection. Those trade for the same used as they do retail. Last time I saw one, I think at European Watch Company. So even that limited production thing was still more than what was needed to meet demand. And that is an incredibly good looking watch. But, I just haven't been inclined to spend $25,000 for steel. So ultimately, yes, what do I think of them trying to get the influencers to pump the watch? I don't think it'll work. I don't think it will work because nobody was in the headspace to spend $30,000 on Atelier Win. $3,000, sure. 13,000, maybe. 30,000, no. That being said, they will sell a few. Collectible says Rolex is certainly rare compared to the relative demand. Whether that demand holds or not is a different question. It's held for quite a while now. Like it's just not the old environment that we used to see. Will it be different once they increase their production even more and get the more factories online? Maybe. But again, eventually they do end particular references, and then those references have a finite number. And that's why, like, people who don't like the new Daytona style and they like the just prior one that we just had a couple of years ago, like, they're not making more of that prior one. So, that market is like the supply chain is predictable. We have a set finite amount of watches available. So there's always that space. And Rolex for a long time had a tendency for vintage, I'll just say vintage, but let's say older references trading for less than what they sell the new references for, but more than the old references originally sold for, if that makes any sense. But yeah, anything could happen. We don't know. Collectible says he basically in alignment with Cloudkin. He has seen the Atelier Wind pump videos. I have not. I've not watched any videos on that watch. I only read the articles to do my video. Von Kroll says that's the inflection. A legit luxury watch and has a Gerard Perregaux movement, but yeah, that price cheeky. Yeah, again, and the use of one of the comments in this article that you see on the screen down below dives into the whole in-house thing. Ariel doesn't spend a lot of time on the in-house aspect, but some people, one of the commenters, he had a few replies and I think some likes, kind of said this wasn't all on the backs of the luxury watch industry, the high prices. Some of it is the enthusiast's fault. And they specifically pointed the finger at enthusiasts who demanded in-house movements. It's our fault for demanding in-house on watches that never had any business using them. And now all that investment had to get baked into the price. Definitely a factor for many models, but not all. And there have been a number of luxury watch brands, especially those with close case back, that have resisted going full in-house for a variety of reasons. But it definitely has became a big selling point. And some of these in-house movements, it doesn't make sense for. Some of them it does because nobody wants 38 hours power reserve anymore. So like if Etta isn't going to sell and Solita isn't going to get the power reserve up enough, okay, I guess that's the option. Where I still think it would be really cool to see some of those mid-range luxury things like Gerard Perregaux or JLC or Zenith dropping more movements into other brand watches and that being an angle, but there's just so much cachet commanded with in-house. So, all right. So this thing about the price. So just sort of a summary on that. This on the Ariel kind of what this gets down to is a changing customer base, as I had mentioned. So what he thinks, and I agree with him on this one, is that when the brands raise the price really sharply, and again, my go-to is JLC under Richemont, and when they jacked a few years ago, the Reverso, steel Reversos, 40%, same movement, same watch, same reference, 40% on some of those. You lose those existing customers. Like even if I had the money, I would never allow myself to spend that 40% increase on a JLC because why should I? There are so many secondhand in great condition. It's not an investment piece because there's so many secondhand that are going to sell for below the old retail price. So it doesn't make any sense. The only reason that would be if I insisted that I will only allow myself to wear new watches for whatever reason. I know there are people like that, but when you raise a price 40%, you price people out. I know people that had been on lists for Rolexes who walked away because the prices got too high. This would be in particular, Rolex hasn't been the most egregious about raising their prices, but if you were on the list for a gold watch, definitely could be a problem for you given how much some of them have gone up. Again, in this article on the screen, there was someone who was on the list for, I don't remember what Patek reference it was. It was a $50,000 watch, I believe. I don't know if it was a 50,000 when they first got on the list, and they were on a list for about 18 months. But with that and the tax and everything else, they ended up passing because the watch then just got too high, and their authorized dealer just said, "Well, this is just the what Patek's command now," and it's like, not exactly. It's what Patek's command at retail from you because Thierry Stern told you to, not what they actually command, because he could go to Watchfinder or 1916 or Bob's watches and probably buy that watch for 5% under what its old retail was. So it that sort of thing is definitely this consumers being loyal to price, not to brand. Definitely a case because we don't all just because you went up 40% doesn't mean my salary went up 40%. You want to know the last time I had a 40% salary increase? Never. And maybe some of you have worked in a place where that was possible. I've seen maybe 20% changing jobs, but not 40% just sitting there doing what I do. So that sort of thing is definitely, I think, a pretty big factor. So you have to find new buyers. The complication there is, let's say you were someone who goes around buying Audemars Piguets. Do you now view JLC as on par just because they went ahead and raised their prices 40%? I'm not sure. I'm not sure that that really works. And in fact, I think in a lot of cases it doesn't work. And we've seen this with a lot of people, a lot of you, some of you even who are watching right now, perhaps, where brands have done something and you have been like, okay, I like this brand, but I don't view this brand as being at that level. Seiko is my go-to. There are plenty of people where, even with Grand Seiko, it says Seiko on the dial. I am not spending $10,000 for something that says Seiko on the dial. I've heard some people that feel that. And I know some people are like, why are there Grand Seikos that are now $10,000 in steel? Like, when did you think you were that? And a frustration because they like the watch. They respect the pedigree. They like the movement. They like the dial. Like, they like how where they like the watch checks all their boxes. But then all of a sudden the brand went ahead and decided they were on another level. And the only thing that really changed was the price. And now you can't reach that level, or you're not comfortable reaching that level, or you don't really believe that watch is at that level because you know nothing substantive changed about that watch. And that is a very big struggle for brands. And that's why I do agree with Ariel. Like, that there's only so many ultra, like, the end game logically, like if you were just to have it, like you were to stream, I'm trying to think of Stream Charts or whatever does this for like YouTube channels and Twitch and stuff. Will let you like forecast growth, but it's always like a linear style forecast. So inevitably growth goes on forever in these models, which is not true and it doesn't stay stable. But if you were to extrapolate based off of that, the end game result is every watch gets priced like a Richard Mille. That's like the end game. Like, everything, the line must go up. Eventually, everything goes up to that point, right? Like, it just takes time. All it takes is more time. But there's only so many ultra wealthy people that can buy Richard Milles. And are they going to buy Richard Milles and Pateks and Atelier Wins and Grand Seikos and JLCs and Breitlings because now they're all Richard Mille priced? It's absurd to, I know it's absurd to take them all to that level, but if everyone's trying to move up, it's like, this has been that war between Rolex. I don't think Rolex views itself as that war. This has been what it feels like Omega has been trying to do. Omega so desperately wants to be compared to Rolex. And with enthusiasts, I think they always have been. There ever since Omega was a more popular brand than Rolex, which once upon a time was true. Like, the quality's there. Omega has more sophisticated watchmaking. Like, they have better movement, like more complicated movements. Let me put it that way. They actually kind of operated in somewhat different spheres, other than Omega actually has a bigger sphere because they want grand complication stuff to flex that they know what, this isn't, we're not Patek, but we can do fancy minute repeaters and stuff. Like, they like to show off that style stuff. Rolex is much more about, this is what people want. We're going to produce these with exacting engineering, and we're going to give people what they want. And it frustrates some people because they feel Rolex is better advertised than Omega, well, which is true, they did. But there's a robustness to those watches that's very well respected. What it sometimes feels like is Rolex tries to have Tudor compete with Omega, and that pisses Omega off. So Omega tries harder to be seen in the league with Rolex, and then the end result is Omega just keeps raising their prices, but they haven't upgraded their movements. They didn't make their watches thinner. Why? So even though the quality is there, the question that comes up is, well, but why are you now 15% more than you were 2 years ago? It's not inflation. It's not gold. This is a steel watch. Like, it doesn't work. And they're not the only brand doing this. It's just sometimes that motivation to be in the competition with them. Kind of like I feel like Swatch Group's strategy is we want Longines to be in competition with Tudor. And so Longines pricing has gone up. They're one of the more contained prices. I still feel like it's not been ridiculous with them. They have a lot more watches now that are up around that Tudor price point, like $3,000 to $4,000 than they, it was a company I used to associate with $1,000 to $2,000 watches. And they still have those, but it doesn't feel like they used to because there's this desire to climb that ladder. But, very interesting though, I think. So that's part of the reason I wanted to mention the article that we've been discussing. Which, hey, speaking of Longines, there you go. Here's a nice photo of one of the designs I really like, actually, is the Zulu time. Let's see. Vron Kroll says, I just bought my third engineer in the 11.11 AliExpress sale. Black, blue, and green waffle dials. They're fun, and IWC didn't lose any sales, though they made a fuss about the engineer. I don't know anything about the engineer, and I didn't know IWC had made a fuss about it. Ken pointing out that you can't claim you're proudly made in China and use the GP movement unless GP sets up a factory in China, and then you could. But they probably won't. Junior says, Grand watches with Dennis. No, but I guess I spent a little time on Grand Seiko, but which is an interesting brand. Maybe I'll get back into one day. But again, the thickness on the spring drives was a bit much for me, but they have made some improvements, I think. Underachieving says the IWC engineer and the new Blancpain 50 Fathoms are nice, but they priced them too high. Personally, I've always thought Blancpain was priced a little excessively. The 50 Fathoms is arguably, again, we can make all sorts of arguments. You could argue it is probably the top, best, I'll say most well finished practical dive watch. Like if we're still talking like steel, and I know they do other materials like titanium and ceramic and all the rest, but if we're talking like a steel dive watch, there's not a lot in the high luxury space, nor really should there be. Like saying aside making them out of gold and just kind of, being silly where we know it's not for actual swimming, even though gold is quite corrosion resistant. So you could swim with it, but as soft as the metal is, it's not seen as practical. It's kind of like, so still actually having their tool functions. For me, it's always been sort of like S&P 300 from Omega, kind of up there, and the price has gotten more and more up there. But I mean, we're talking about watch what retails over $5,000 now. Then you've got like the Rolex sub, right? I'm going to leave the deep sea out of it. Rolex sub. So we're talking what, about 11,000, somewhere between 10 and 11, I think, for the date version. And then 50 Fathoms, which is, I don't know. I don't remember what 50 Fathoms in steel retails for. I think on the gray, or excuse me, like on Joma Shop, like secondhand, unworn. Yeah, no, they are gray. Gray market, maybe 12,000. So I want to say they're retailing 15 to 20. So and their finishing is really good, like with the movement finishing and stuff. I do feel it is better finished than the sub, but, and I'm not sure if there's anything really kind of mass made that's above that. That's a diver that like has the refinement. I'm not just talking like real limited pieces. I don't know. But anyway, very interesting watch. 50 Fathoms was always just too big for me, though. I never really considered it outside of the Bathy scap. Cloudkin says, just like with any collectible, only a select few items are investable. The others should be happy if they keep up with inflation. Absolutely. Absolutely. And there is actually one of the things I think some investors like about watches is there is some stability on what we know. It's pretty consistent. Like we saw some weirdness in the pandemic, right? I mean, when Vacheron overseas are actually going for more secondhand than new, that was kind of my point where I was like, I knew everyone had lost the plot to some degree. And I think that's now been fixed outside of the blue dial, which, okay, there's a special one that goes for more. That's understandable. But the overseas was never that popular of an integrated style design. So when it was hard to get, that just felt like okay, I can't get the Royal Oak. I can't get the Nautilus. I want a Holy Trinity. This is my option. But like the Nautilus, like the 57s, certain of the 57s, certain, of the Royal Oak line, those have been above, that you pay more used than new for quite a while. Not forever, but the Daytona has been a hard to get watch for a long time. There was a time where it was a watch that was discounted. I don't remember that time. And most people weren't buying watches when that time was around, but who are in the hobby today. But I don't see that going away. I don't see you ever being able to walk in and get a Daytona ever again. I don't think that had anything to do with the pandemic. Just certain things moved in that way. And Rolex probably throttles their supply on that watch because it ended up being this sort of halo piece. Um, so, those sort of things for investors are very predictable. When you start being speculative, which was kind of like in this piece where Ariel was talking about this thought about the brands doing this fallacious investment angle. I don't know. I actually think this is more common. Again, I already said I don't really agree that a lot of the brands are really doing this in the luxury space. Specifically, social media influencers, sure. Used dealers, sure, possibly. Like they have trying to say, get this FP Journe, it's going to be worth even more in 5 years. Like they have the biggest vested interest to try and do that. At this point, the other brands, if they want to close the delta and raise their prices because they see what the prices are going on secondhand, that is a more believable strategy than just trying to nurture the investment angle. Like, why not just seize the delta yourself? If you really that's one of the things I've mentioned when people have gotten frustrated with Rolex. The frustration generally isn't actually with Rolex. In some instances it is, but it's really with the authorized dealers that they use and however your experiences are with how they handle their supply. But Rolex could have looked anytime they wanted and said, if Daytonas are $30,000, that's what we're going to price it at now. And they don't do that. But they're not stupid. They know that what they go for secondhand. So they could have just closed that gap to try and take that profit for themselves. So some brands have done that, and that is a more logical strategy than what Ariel has presented here, in my opinion. So let's see. Benton has joined us. Hope you are having a good day, Ben. What's good, people? What's on your wrists? I'm late to the party. Well, I actually today I am in honor of prices going up on things. I'm wearing my Rolex Explorer 2, which I bought used in 2006. Yeah, 19 years ago, for less than it was new. And today trades for well more than what it ever did used or new. For whatever reasons, because they're more popular now. This was not a popular model. It's still not really that popular of a model with Rolex. I imagine if you wanted to get an Explorer 2, you would not have to wait all that long today. During the pandemic, everything steel was hard to get from them. But anyway, it's my only Rolex that I have at this point. But it's robust, and I might mulch again, even though I mulched last weekend. And I thought, well, I want to wear a mechanical watch today, but this one's already scratched up so much. I was like, I don't mind wearing it. Let's see. And Leighton says, don't forget the GeoCQ. I did forget the GeoCQ. What an interesting watch. I've never tried one on. Visually, I very much like it. I've owned a couple of Glashüttes, and I guess I should say Glashütte. I think that's how it's pronounced. But they're never a diver. I had a Pano, which I let go of a few years ago, and I actually have a 60s that's in their heritage line now, but it used to be in the Senator line. I have an older one, Geo 60s from 2012 or something. I haven't owned it since 2012. I got it this year, but that's a dress watch. Like that, mine is gold, so it is not for mulching. So one of those things. I think we've hit on all the major stuff. There was one last piece that Ariel brought up, and it was about the sort of a disconnect. I don't really think there's a paragraph I want to highlight for you. I'll put back on the full thing on the screen just so you see it. But sort of an affordability disconnect is sort of, I guess, how we would summarize it, which was that those of us who buy watches do understand that prices are supposed to go up over time. Like just costs go up, like inflation happens. So we understand that, but since affordability hasn't kept up, this kind of relates to what we were talking about with the price. You're not appealing to your customers are loyal to a price point. As they've done this, volumes going up and brands are pushing up to instead to these high price bands. They alienate their existing customer base, not on the angle of that we're more loyal to the price band that we are in, which I mentioned earlier. This was more the argument that and I touched on it a bit with like the movements and the in-house and stuff, but rather that you're not putting in any significant improvement. So those of us who have been buying watches go, wait a moment, why is this now this when you didn't upgrade anything? So like when the in-house movements, like when Tudor started putting in the in-house movements, or I'm going to use Oris as an example. I've been saying Tudor too much. Let's use Oris. Oris has that in-house movement, the one with the 10-year service interval, like Rolex, which was really impressive. And I've had one of these Orises. I had a Pro Pilot X with this movement. I don't have it anymore, but really impressive movement. Not visually interesting, but just like robust. But those watches were like $1,000 more than the stuff that's using the Sellita base, which has been Oris's bread and butter. People, I think, understand that because there was an upgrade. The new movement, all right, setting aside whether or not you even knew if the in-house movement was better, that it was advertised with a longer service interval to suggest that it's better. It has a way better power reserve. So there was a meaningful upgrade to it. So whether it's worth the $1,000+ that you have to pay for any given watch to have that movement rather than the Sellita is up to you. However, that is understandable. But when, again, picking on my favorite, football, the yank away, I'm doing a Lucy Peanuts thing here, JLC, 40% price increase on the same reverso with the same movement that's from 30 years ago, with the same reference number. There's an affordability disconnect that it doesn't, like, nothing about the product is better. I do understand that the price would go up over time retail because labor goes up, materials go up, inflation goes up. That's life, but not 40%. That's kind of the final piece of his argument that, and I've echoed this, that where I do feel that there's a very strong basis for that's a true thing. So by and large, I think Ariel got it right that the luxury watch industry has damaged itself with high prices. I think the one thing that I really pushed back on is that they are leaning into the investment class. I don't think so. That's more us. That's an enthusiast grown. Social media influencers maybe explain it. I don't think a lot of brands have very successfully exploited the investment angle. A couple that we could point out that feel like they have could be the boutique strategy, work my way up the list brand. So what is that? That's mainly Audemars Piguet is probably the most notorious, but A. Lange & Söhne is as well. If you want their steel, you got to play the game. If you want the good Royal Oaks, you got to play the game with AP. I think it feels more pronounced with AP because they're just a more popular brand in general. Also, conveniently, because it's only the sports stuff, by and large, the sporty stuff from Longa, that, like, AP is all sporty stuff now. I don't know how you want to treat the 1159, but it is not a dress watch. For A. Lange & Söhne, the sports stuff is the exclusive, like, trades more, like an investor might want it because they could make money selling it. Like, it's the desirable halo piece. But if you're into their dress watch stuff, that's the stuff they make everyone buy to get it. So if you're like me, where you're like, I like Longa 1s and Saxonias and all of that, like, that stuff gets, again, if you're willing to buy secondhand, that stuff gets dumped. So you can get, I'm not going to say bargains. That's not the bargains they once were. And they are very expensive watches. I mean, the cheapest thing would probably be, you can probably get into a Saxonia somewhere between, I don't know, 16 and 20,000 US dollars. So not cheap. At this point, you might want to weigh what you could get from Glasuta Original and see, because they do a lot of high quality finishing and such, especially if you're not into precious metal or care about precious metal and are willing to have a watch in steel, because they'll do their dress watches in steel. But anyway, I'm rambling. The point being that, like, a lot of the famous Longa stuff is really easy to get. You can walk in and get a Longa 1. That's not going to be a problem. They want to sell you a Longa 1. They want to sell you a Saxon. You want to get a Royal Oak, I mean, I wish you luck. Probably easier to buy used. I don't know if it's worth probably is, but like in terms of what you'd have to buy if you didn't want anything else, probably be a bad deal. But so those might be exploiting investors to some degree, but I don't think most brands are. I think they play with the LE model and stuff in a hope to just drive FOMO, not really thinking necessarily that it's investor FOMO versus enthusiasts. They don't care. It's an idea of fear of missing out FOMO sort of strategy. So that's all the main stuff I want to hit on. I'll let me go ahead and clean up on the chat here, and then we will end this thing. Underachieving Watch Collector says, my last, I think you mean expensive watch was purchased in 2019. I'll probably not buy another expensive watch because of price increases. Well, you can always look secondhand, and those increases may go. I'm still waiting for the day to see an Oris like on Joma Shop for under $1,000. I think maybe I've seen a couple, but I mean one that I want. That won't be with their in-house movement, but I'm curious. Some of them have, they're 25% off there. If they could just get another 25, we might get to it. Underachieving continues. Wonder how the Oris in-house movement is working out for them. I haven't heard anything about like if it's had extraordinarily like high amounts of service needs, or I haven't heard any negatives. Kind of like how when Tudor came out with their in-house and there was the date issue early on. I haven't heard anything like that out of Oris. That's not to say it doesn't exist. I haven't heard it. The one thing that's interesting about the movement, because I did learn about this because I looked it up because I had this issue, what I thought was an issue, is you have to wind the thing forever. And by forever, I mean like 30 seconds. Like it's like a double barrel movement system. And so hand winding it to get it to start, if you've let it wind all the way down, requires like, I don't know, 40 crown turns or something. It's like, it seems like you have to fully wind one of the barrels before that balance will kick on. I don't know. I thought maybe there was something wrong. Like my timekeeping was okay. Like it was within reasonable spec. I think it was within spec. It was within what I would expect at least. So I looked online and I found out, no, a lot of people are like, yeah, no, if you let this thing wind down, it takes a lot of turns of that crown before the movement will kick on. And then it will run until the balance is depleted, the mainspring is depleted. But yeah, no, I don't know. Haven't heard anything other than that. Tuna, welcome. Glad you made it. And thank you for being a 99-cent club member. I do appreciate it. Leighton says, kind of like the FP Journe Elegante. I have to look again. I am not a Journe fan. Like the designs, there's not any design of his that I've wanted to own, which is probably for the best, given that those are more investor pieces at this stage. Junior, thanks for being here. Glad you were able to make it. And Remus, thank you for being a club member as well. I've read quite a few horror stories about the Oris in-house movement. Well, you see, this is why I qualify all of my statements, because I am not nearly as well informed as one might think I am. Do not be fooled by my long-winded discussions of one particular editorial on one particular website. A lot of you probably know quite a bit more about watches than I do, but we're just here for fun. Vronkrol says, I think underachieving blocked me. I didn't see his comments anymore because of my co-pages, I assume. I don't know if he's blocked you or not, but now he gets to see your comment so he can assess one way or the other. But that is it. I'm not here to bring about world peace, just talk about watches. So thanks everyone who is able to tune in. If you're watching the recording, go ahead and leave a comment about what you think of is this the watch industry's fault? Have they shot themselves in the foot with too high of prices? Will they pay a price, sticking with the money theme, for it moving forward? I have no idea. So I throw it to you all. Anyway, that's it. I will plan to be back next weekend with another live stream. Take care, everybody, and I'll talk to you on the next one.